Eric Muathe, Muathe.com, with part 1 of this weekend's market analysis video. I hope everybody's doing great for the weekend of June 24th and June 25th, 2017. Let's take a look at markets here at the close of Friday's session. We begin with the Nasdaq Weekly, and we can see a very nice action this past week. The Nasdaq was up about 1.8%. And more importantly, we can see that now the RSI closed back above 69.1. So clearly the bulls are doing exactly what you need to do in a bull market. And as long as the RSI on the weekly is back above 69.1, we might have a chance of seeing this type of a move where we have this gradual move higher and this gradual move higher also. All of them happened because RSI was above 69.1 during this phase, above 69.1 during this phase. So you can see as long as the Nasdaq is above 69.1, the market continues to be very strong. At the same time, because we're closing just above 69.1, any rejection, especially rejection with uniform action right there, might be what brings the market lower. So let's watch that. A good example of that is here we had uniform action when trying to move above 69.1. There was uniform action rejection right there, and this is the weekly high. We get a multi-week down to sideways market. So let's watch. The more the Nasdaq stays above 69.1, again, that's a strong market. Rejection when trying to move above 69.1 might set the stage for a pullback. Also, I should add here, now that we've had more than 2 weeks of rest since this all-time weekly closing high, the level there is 6305.80. Any movement above that price is going to be for a fresh, legit breakout. You always need at least 2 weeks of rest. Here we have 3 weeks of rest already, so the minimum requirement has been met. So any breakout above 6305.80 is absolutely a buy signal for the market. Something similar to this most recent breakout here, which was very successful. Once the Nasdaq cleared that level, you can see what happened, a nice price action. So bulls definitely want to see the market advance past this price, while bears would like the market to fail if it tries to break out above this price level. Now this is a 2-year weekly chart for the Nasdaq. 2-year weekly. I want to take a look at the 3-year weekly chart for the Nasdaq to illustrate a point here. So now we're 3-year weekly. Reason being that I want to show you a line that I think the market is responding to. In other words, it's a bullish signal. If you take the previous highs, I talked about this last weekend. So this was a resistance line. But once the market moved above that level at the beginning of 2017, which is there, now what we do is we extend that line, and anytime we have uniform action support on this line, that tends to be rebound. Now let's test that theory. You can see here we tag that line, successful back test for the weekly closing lows there, and now we are bouncing back above that line. So we can clearly see that as long as the markets are above this black line, the back test line or the breakout line, whichever way you want to look at it, this market continues to favor possibility of higher price levels. At some point down the road, should we crack below that line, that's when we can start looking for a bigger correction. But for now, the market ended the week exactly as the bulls would want the market to do. Now let me show you one other line which is also a good signal for bulls. It is the RSI lows line on the weekly, and I'll just do it like that. And again, you see visual evidence of support. We bounced on this line off those lows right there, and this past week we bounced on that blue line for this nice uptick this past week. So the bulls are doing exactly what they need to do to keep the market in a steady upward grind. Let's take a look at the Nasdaq Daily. And it goes without saying that this market's been responding well when trying to test the RSI, the 50-day moving average. Nice support above the upward slanting 50-day moving average. And recently we came here, we tested it, and we are higher. That's a sign of a healthy market, whichever way you want to slice it. Also, take a look at what happens, and we know this from many of the educational videos on my channel. When markets move below 50 back above it, that tends to be buy signal coinciding with that support level. Uniform activity below 50 back above it for that re-entry. Uniform activity below 50 back above it for that re-entry there. Uniform activity below 50 back above it for that re-entry. Uniform activity here for this re-entry, and here we went below 50 back above it with uniform action for those lows. Again, markets are doing exactly what they need to do. And then also, if you draw the line connecting RSI lows, and I'll just draw it here, connecting this low here, extend it out without any type of adjustment, we came back to test that line, and guess what? We held. So we can see that on the daily, the Nasdaq continues to be very, very stable, if not bullish. Down the road, should we break this well-defined line, is when we can start looking for reasons to be bearish on the entire market. Right now, the market, as far as the Nasdaq is concerned, looks absolutely stable to bullish. And don't forget, I've been saying for a long time that as long as the markets are showing that the RSI is trading above 69.1 on the Nasdaq, expect the markets to be stable, pullbacks are shallow, and outright to be bullish. And I always show this chart because it's a 5-year monthly chart for the Nasdaq. We can see exactly what happens when a market moves above RSI level of 69.1, like it did here. It stayed above that level from about July of 2013 until sometime August of 2015. So you're talking about 2 years above the 69.1 threshold, which was good enough for this bullish run. Yes, there were pullbacks, they were short-lived, and they were shallow. So we can expect more of the same. As long as the market is above 69.1, expect a market to be sideways at worst, bullish at best. Take a look at the Dow Weekly Chart, and believe it or not, this is week number. Well, let's count them. So we broke out, and that breakout level I was using was this previous weekly closing high right there, and the number was 21006.94, and we've been above that since the breakout on 1, 2, 3, 4, 5 straight positive weeks. That's a very, very strong market. The intent is quite obvious that the market here still continues to act well. We can see that the Dow continues to stay above 69.1 on its weekly chart. The bulls are definitely in control here. If we take a look at the Dow 30-minute chart, we can see why we came off the lows of Friday's session, off the lows there. And simple understanding here, we know that this was the recent lows in May, and the market did recover after a shallow pullback. So what we do is we figure out where we began that movement with the RSI. I call this method the Uniformity Method, and you can see that there is a movement right there on the RSI, which is this entry on hindsight. So we use that information. Anytime we get uniform activity bounce on this line, we know that it is where the market stabilizes. Support here for those lows. Over the last couple of trading hours on the 30-minute chart, we've bounced on this line twice. Hence the reason why we came off the lows of Friday into the end of the trading week. The market found support on this line. So we can see that even on a short-term basis, the markets are still constructive. Now, of course, if we come back and test this line and break below that, then that's going to be something new, something would have changed, and we would assume that that is telling us to expect lower prices, but we haven't seen that. What we've seen is support, indicating that market continues to be favoring the upside. And of course, the Dow broke out about 3 months ago and continues to hold above that breakout level. What's not to like here? We had the required 1 month of rest and bang, we broke out. Keep in mind, the Dow continues to trade above 69.1 since about, let's call it November, December of last year. So this might explain this nice uptick. As long as the Dow is above 69.1, pullbacks are going to be shallow, short-lived. Ultimately, the market has a higher propensity of making higher all-time highs. So far I've been talking about how the market is bullish and remains bullish. Let me give you some things that could be a problem here. Short term, visually that is. In other words, something for the bears also to consider as a reason to continue expecting lower market prices. What I'm going to do, the first thing I'm going to do is draw a line, and this is the previous resistance line. And to understand this, just take a look at this breakout here in February above that line, coinciding with this price breakout, and the market pretty much has been above that level since. All right, in fact, you can see there was a back test of that breakout level that held, and very consistent with what I'm about to show you. So I'm going to extend this line like that. Now you might say why, but I'll share with you in a second. Take a look at this bounce back above the line for this support level there. We come and bounce back above the line for this support there. Broke below the line there for this movement lower. Back tested it and failed for those highs. Went above the line for this entry. Went below the line, back above it with uniform action. Remember, uniform action tends to be reversal in my own research for this re-entry. Broke below it for this movement lower, and now we are coming to test it here. So either we are going to move above that line, and as we've seen, that has been good for the market, or we are going to stall for a pullback. So we ended Friday's session exactly on that line. So one or the other. But to explain this, let me show you the hourly for the Nasdaq. And the Nasdaq is coming back to test a recent break line. So we broke down here off the highs, and we've been trying to move above it, something like that. So far we haven't been able to clear the resistance right there. So that's a challenge for the market right now as far as the Nasdaq hourly chart is concerned. So failure to move above this line here does suggest that we can expect some type of a pullback. Otherwise, if the market can jump above that line, that's again added evidence of a continued move to the upside. If we take a look at the 30-minute chart for the Nasdaq, so the 30-minute, and we can figure out where it broke down. Simply, this was the break of the RSI. Keep in mind that came with negative divergence, so no surprise that the market pulled back from this move here. That was negative divergence that set the stage for this drop. But anyway, so this was the break of the RSI. We take that information, draw our uniformity resistance line. There you have it. Check the description, or check the description of the video for a link discussing this in detail. But you can see the market's been struggling to move above this line ever since that break. And even at the highs of Friday, we are back here. So either we are going to clear that level and move higher, or we find it difficult, we confirm resistance and we pull back. Now keep in mind, if you take the lows of the 30-minute chart, you can clearly see where the market found support at the lows of Friday's session right there. So that held, which might explain why we did not drop significantly. In fact, we closed higher for the day. So the market is stuck in what looks like a wedge. So let's draw that. So we got top side resistance, bottom side support, and ultimately either we are going to move above that wedge for push higher, or we're going to break down below that wedge to begin some type of a slide. Now let's take a look at the Dow Daily Chart. So Dow Daily, and let's have some fun with this chart. So we are going to draw a line connecting RSI lows, something like that. And we can see recently we've come and tested this line for double bottom support here. So good support there and there for those lows right there. And then also we bounced on this line with uniform action for these lows right there. Perfect timing. All right, that's good. Let's draw another line because I'm leading up to something, and it is the previous resistance line, and I'm just going to extend it out to save some time. But what you see is we jumped above that level. So this here was a breakout. Nice entry. We come and test this line. Good entry. Right there. We test the line successfully for this entry. Double bottom support on the same line for the lows there. That's a perfect entry. And then uniform action support. Mwah! Good entry. So we definitely see that the market is responding to these RSI lines. There's no doubt about that. Now let me show you one other line that I think is coming in play. Similar type of situation or same type of analysis, and it could be suggesting short-term highs are in. It's a simple line. I'll just do it like that. And we break below here. This movement, resistance there of those highs, and now we hit that level and we are pulling back. So maybe day to day, this is where the market starts seeing some short-term highs. We shall see, but based on the RSI line I drew here for the Dow, looks like that makes a lot of sense. Also, it shouldn't be lost that we tried to move above RSI 69.1, and the market rejected that idea with uniform action above this level and back below it. That generally tends to be a sell signal by itself. Now, unlike the Dow and the Nasdaq, S&P 500 seems to be struggling slightly, not by much, but as of right now we've been unable to hold above the prior and the current weekly closing high, going back to the close of 42439.07. We closed just below that, so we've been trying to move above this weekly closing high right there. We've been unable to break out. It's a little bit of a problem here, but at least the RSI on the SPX continues to hold above 69.1. So net the weekly chart is sideways to bullish, but bulls would like the market to move above this price to show a strong breakout. Otherwise, the more it struggles to hold above that level and starts drifting lower, the more that might spook some traders and the market might start pulling back. So above this price is very bullish. Failure to break out is pretty much not what the bulls want to see, short term that is. If you're looking for reasons why the market could pull back, take a look at the S&P 500. The most recent moves to new highs have come with RSI rejection when trying to move above 69.1. Now, there's no need trying to understand this by looking at searching the internet, because this is something that I talk about. This is my own understanding of the market. So check my videos on my channel if you want to understand more about this. I'll include a link below the video description or in the video description. And so we've seen RSI double top rejection when trying to move above 69.1. That might not be a good sign. Also, it corresponds to a recent break. Going back to this break here, which gave us a warning high, and so since then You can see the market was rejected when trying to move above that line there for the highs there, rejection here for those short-term highs, and now rejection here for those highs. So looks like as the market is trying to move above this red line, it keeps being rejected. So ultimately that might cause a problem. And also if we take a look at the hourly for the S&P 500, we can see a push to new highs, but this has come with declining technical strength. Also, these highs here came with the RSI being rejected when trying to hold above 61.8. That tends to be the worst type of negative divergence as far as my research is concerned. Alright, so that is not a good sign in terms of the highs. The highs came with the worst type of negative divergence. I think that suggests that a pullback only makes sense. And we've seen a pullback of some sorts. Is there more downside? We shall see. But to summarize here, we can see that the S&P 500 has a well-defined RSI support line on the lows, which is why we did not drop as of Friday's move. And we can see topside resistance. So we're definitely stuck in this wedge. I forgot to mention that the break here on the RSI for the SPX brings us off those warning highs. Since then, this has been resistance. Rejection here off those highs, rejection here off those highs. So we're pretty much stuck, to summarize, here in a wedge. And I think ultimately the market's going to determine whether it wants to move above or below the wedge, as we've been discussing with the charts for the Nasdaq and for the Dow. So nice wedge and topside resistance. So either we are going to break out above that wedge, or we are going to break down below that wedge, and we have to wait for the market to lead us into what direction it wants to take. In fact, here, let's take a look at the 5-minute chart here, and we can see that at the highs of Friday's session, the market had come back to test RSI top lines. So let's just draw it like that. And on this 5-minute chart, once I saw that double top, I knew around there the market was going to see the highs for the day. Let me paraphrase that. I suspected the market was going to see the high for the day. That's why I posted that premium tweet that the market was seeing challenges at the highs. Right there. And the chart at the time is right here. So again, I was seeing the possibility that the market was at the highs of the day because of this simple line here and here. And that's what happened. So we got the highs somewhere around here, pull back. Keep in mind, it also coincided, I could see that this is the break of the highs there. And the market's been struggling to hold above that level all week. We found resistance here for the highs there, and as of Friday we tagged that level and we pull back. So back to my charts, let's go back there. So we came off the highs. Let me show you something real interesting, or at least I think it's real interesting. I'll show you how I sometimes look at the market, and it's very interesting. So let me share with you what I was seeing, what I see. What we're going to do is draw a line connecting the previous resistance line. We break out above that line here for this explosive move. So let's take that information and extend our line. I'll just do it like that, and I'll discuss the main points here. Of course, we break out, nice entry in the market. Break below it, time to get out, short term. We recapture back above the line, this entry, support for the lows there and there. Again, uniform action below the line, back above it. By now we know that that means it's a reversal signal for that re-entry. And as of Friday's lows, the market tagged that level, kissed it, and went higher. So there you have it. The technicals are controlling this market for sure. And let me end this video by taking a look at the S&P 500, because that's the big deal, and I want to take a look at the 5-year monthly chart, and I'll summarize the market. As long as we are trading above RSI of 69.1, expect the market to be sideways to bullish. And as I always show you every week over the last couple of months, this is the type of action when you hold above 69.1, you tend to get this nice of acceleration. Forget what the textbooks say, that when stocks move above 70 you need to sell them. That's a myth, and evidence is right in front of us. When markets move above 69.1, they are screaming that they are a buy. Eric Muathe, Muathe.com. But by the way, before I go, subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we obviously look at stock picks, look at sectors that are breaking out, breaking down, take a look at commodities, and just so that you can have an idea. Last weekend's video was a little bit, for subscribers, the part 2 was a little bit lengthy, about an hour long, where we went into details discussing many sectors that were potentially moving or breaking down. So check out part 2 if you're not a subscriber. Otherwise, I'll see you guys in the next edition of my weekend market analysis. Enjoy the rest of your weekend. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Mwah. Woo.